Hi everybody, it's Brian Harris here. I'm here to do my first edition of the weekly real estate roundup. And in this, I just want to give you a quick synopsis of what's going on in the market, where things are headed, and just kind of talk about the news from the previous week. So the first thing I want to talk about was interest rates. They hit an all-time low this past week. 30 years are at 2.86%, while 15 years at 2.3%, 37% average. So what that means is borrowing money is very inexpensive, and it's allowing buyers to get into houses that may cost a little bit more, which is good because prices have been driven up because there is so much demand. We're also starting to see a lot of that shift that you might have noticed in the news, where people were shifting out of the cities to move to some more suburban/rural areas. And the reason for that is that people see their house more as just an office space, a house, and maybe perhaps even some school. So it's got some additional needs that people weren't even looking at a year ago. So that's causing a little bit of a shift, as there's more demand for people to get the house that has all those things, as well as some people looking to just get out of the urban corridor. So typically at this point in the year, we start to see things trickle down a little bit, as we head into November and December. But I'm not sure that the buying season is really going to slow down too much this year because there is so much demand. There are still multiple offers, incredible amount of competition for houses. So if you're a seller, it's a great time to sell. And as a buyer, it's really not a bad time either because the rates are so good. You just have to be ready to go, find the right house, and be willing to, I don't necessarily say pay a premium, but you need to be ready to go in, where the sellers are looking. The only concern that I'm seeing is this past week, some numbers came out about a potential foreclosure crisis. The CoreLogic reported that homes that are past due in the 90 to 119 day range quadrupled from May to June to 2.3%. So right now the government's kind of helped prop that up, so it's not going to collapse yet. But if the government steps away or things start to unravel a little bit, that's something we can keep an eye on. But fortunately, we are seeing unemployment begin to decrease. People are finding jobs. As a country, as a nation, we're at below 9% right now. Tampa Bay is a little bit higher. We're actually up at 10.1%. But that could also be a little bit because we rely so much on tourism and restaurants and things like that. So as the virus starts to get a little bit less severe, people get more comfortable going out, people travel more, we'll start to see those rates continue to fall. So I'm not necessarily worried from a market standpoint down here, but it's just something to keep an eye on as we move forward. Finally, this past week we saw that lumber costs have actually gone up about $16,000 for the average house. So new builds, you're going to start to see a little bit of an uptick in price points, not only because of the lumber costs and things like that, but also because there is so much demand and they can charge a premium. That used to be that you could kind of work with them to get a lower price point or throw in some incentives. Now they've got their sticker price, they've got their incentives, and there's really not a whole lot of play. Not that saying it's a bad thing, because you're able to get in ahead of the curve and get the house that you want without having to compete with other buyers to get in the house. So there's some give and take. It's also nice to have a brand new house where you don't have all the repairs. So that's what I have for this week. I think it's a good week. Outlook looks pretty strong. I don't have any really hesitancy at this point, but I just hope you go out and make a great week, and look forward to talking with you next week. Bye-bye.